there has been a sharp decline in the Indian stock market. The Chinese stock market has gone up tremendously. At the same time, China economy has not been doing well.
Hello and welcome to Cut the Noise, a show where we decode market trends and uncover insights that matter the most to you. This October, something unusual is happening. Foreign investors are pulling out of India and putting their money into China. What's surprising is that China's economy is struggling, be it the massive real estate crisis they are in, or the debt they are facing, or the rising unemployment. Whereas India's economy is booming. And I got curious about what's driving this shift. Helping me make sense of this trend is Ankit Goyal, who follows the markets very closely. Thank you for joining us, Ankit. Can you tell me what's happening in the Indian markets?
The markets have been rising consistently over the last few quarters and years. But last 15 to 20 days, we have seen some sharp decline in the Indian stock market.
What's the reason behind this decline?
See, one big reason behind this decline is the foreign institutional investors pulling out money from the Indian stock market. For the last few quarters and years, they have been net investors. But if we see the data in the first 10 days of October, they have pulled out around 58,000 crores from the Indian stock markets. One of the factors, which governs the rise and fall of the market, the demand and supply of the stocks. So when FIIs pull out money, then of course, it creates pressure to sell, which brings the stock prices down.
Why has this suddenly happened? What's triggered this outflow?
So the foreign institutional investors, they have the objective of getting the maximum returns, right? These players will invest in the markets wherever they feel the returns are high. A few days back, China announced a large stimulus for the economy. So essentially what has happened is they have pulled from India and put that money in the Chinese stock exchange.
Can you tell me about the stimulus that China has announced?
Yeah, while China is a closed economy and the access to data is not very transparent and clear, but the kind of stimulus they have given now is essentially linked to providing liquidity to the markets, right? Liquidity or access to money, in other words, is one factor which stimulates the economy. When more money is available easily in the hands of the people, that initiates, consumption and investment pattern. One more factor which I want to highlight here is that the Chinese economy was kind of undervalued compared to the Indian economy. Indian stock market has been rising for a while, and certain parameters as to the valuation of the economy may have also driven the FIIs to think that there are more returns to be made in the Chinese stock markets rather than the Indian stock markets right now.
How does it impact the Indian market?
The immediate reaction has been a correction in the Indian stock markets, but I think we should wait and watch for some more weeks and months to see the trend very clearly. Not to forget that India currently, the domestic institutions buying is quite large, supported by a large retail investment in the stock market. So I think that continues, and that should give some support to the correction.
Yeah, I was also reading on the domestic institutional investors, how they have absorbed the impact of the foreign investors pulling out. They've invested close to the same amount that the foreign investors have pulled out. How long do you think this fluctuation can continue, and what should our investors do in this situation?
Equity investment, is a long-term play, right? A matter of correction for a few weeks or months or even quarters, is not an indicator of a long-term health of the economy. I think for investors, it is always advised to diversify, right? Now that equity markets have been rising for a number of years, there has been some pattern about, keep investing in the stock markets. But I think diversifying the portfolio at every opportunity is very, very important. And that's where I believe that investing in fixed income instruments is extremely important. GRIP offers a really good fixed income investment platform, and the products are quite attractive.
That was really insightful, Ankit. Thank you for giving us your time.
Welcome.
Now, for our viewers, volatility can be unsettling, but it's also an opportunity. Stick to your investment strategy, diversify, and keep an eye on the bigger picture. What's your approach during these fluctuations? Let us know in the comments, and don't forget to like, share and subscribe to GRIP's YouTube channel.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and or default in payment. Read all the offer related documents carefully.